I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, June 1st, kicking off a new trading week and a new trading month, and it is more of the same to start. Volatility and crazy borderline black swan headlines. But before we get into that, I wanted to zoom over to bluelinefutures.com. If you didn't know, we do write daily research and commentary. You can get your 2-week free trial by going to bluelinefutures.com. Research tab, click on subscribe here, and you can select the markets that you want to see in your inbox each and every morning. Anything from crude and gold to the currencies to grain, livestock, and the soft markets. So if you haven't gone there yet, sign up, bluelinefutures.com. Again, the research tab will get you there. Put in your basic information. You get that emailed to you each and every morning before the markets open. Now let's kick things off with the corn market. Now corn, we've been talking about this pattern here for the better part of the last 2-3 weeks of potential head and shoulders formation forming, and we did get that. Sure, today's price action negates and neutralizes some of the bearish developments that we've seen, but there was opportunity to trade off this head and shoulders, about 70 cents of opportunity from the high to the low. Now I'm not saying that you're going to go and get all of that, but there is opportunity there, and this is an environment not just for the corn market, but for commodities in general, where bulls make money, bears make money, and pigs get slaughtered. You got to capitalize when the market gives you something. That's why I always believe in trading around a core position where you can capitalize and still keep some exposure without really risking it all, so to speak. So head and shoulders played out a little bit. It wasn't picture perfect. We kind of neutralized some of that bearish price action here in today's session. I wouldn't be surprised to see that continue. Now $7 is obviously going to be psychologically significant, but it's also technically significant. This is where we really started breaking down from on May 13th. If the bulls can chew through here, I wouldn't be surprised to see the market go retest those old contract highs. A failure here probably brings us into a little bit more of a consolidating range in the very near term. Maybe go back and retest the 650 level. So failure at $7 probably consolidates us $6.50 to $7. Breakout above, look for a retest of potential retest of contract highs. Now moving over to the soybean market, probably looks familiar. It's a head and shoulders formation forming, and this is something we've been talking about for the last week, where we believe that the value was in soybeans holding that 1490 level, which was big support down at the end of April. Tested and held that multiple times last week, and we talked about it in our interviews with RFD TV and interview with Chip Flory and AgriTalk, that look for a retracement of the breakdown point near 1575, which is basically what we got. We have got 3-star resistance here, 1574 3/4 to 1577 3/4. That held today, and that presents a decent selling opportunity, whether you're selling on a speculative basis or you're a producer looking to lay off some risk. A break and close below or above this right shoulder, again, take your medicine and move on. If you keep things well defined as far as risk goes, you're going to give yourself plenty of opportunity to trade around this volatility in the market. So the rejection at 1575 does favor the bear camp. It doesn't mean we can't go retest that tomorrow or the next day. But against this resistance, we like the risk reward to the sell side and wouldn't be surprised to see the market potentially chop around and maybe even drift a little bit lower off of that rejection. Again, chew through there, take your medicine and move on. It's okay to have losing trades. We say that there's 4 trades. There's big winners, small winners, small losers, and big losers. If you can avoid that last one, you'll be in all right shape. Now, moving over to the wheat market. Wheat market held some trendline support here, which goes all the way back to last summer and last fall. We got a little bit of a recovery rally, which is what we've been hoping for. We've been in the bearish camp, but have neutralized our bias really in this 680 area, looking for a potential rebound to that 7 to 708, which is a 50% retracement from the recent range. We look at that as a selling opportunity, but again, keeping the risk parameters in check, a break and close above the 7 to 708 will neutralize our bias and probably have us taking our medicine, but we like being sellers against that pocket on the very first test. Wrapping things up with live cattle, with June just around the corner from going into first notice day. That's on the 7th. We've shifted our focus out to August. Now, the cattle market and the livestock market in general was where a lot of the headlines here were this weekend, with JBS getting hacked. There's no telling how long this could play out. The recent pipeline hack that we saw here just within the last month took about 2 weeks to resolve. Hopefully this doesn't take that long, but kind of just comparing and contrasting, that's how long the pipeline took. Hopefully JBS can get things ironed out here a lot sooner than that. All in all, I thought the futures held really well. We do have new daily expanded limits. That's $5 for live cattle and $6.25 for feeders. We kind of tested it a little bit on feeders, but didn't hold that for any amount of time, and basically closed right where we opened today for live cattle. And this was a big technical area, 116. This was kind of the secondary breakout point from the beginning of the year in January. It became support here in February, support here in March, and support here in April. And we defended that. If break and close below this 116, you probably start to encourage some long liquidation from the funds. It's really not a whole lot of significant support until you get down here to 112 to this 113 and a quarter area. So the volatility will likely remain high this week. We're a little bit skeptical of today's price action and wouldn't be surprised to see further pressure, especially if we don't hear anything substantial with progress on the JBS hack. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.